Hello, good afternoon, each and everyone. Welcome to Epic Research Learning Center. Our today's webinar is on trading strategies in market. In this particular webinar, I'll be focusing on specifically some of the stocks for the week. We'll start this webinar from all the analysis of the market to stock specific analysis we have. And to start with, Epic Learning Center organizes webinar on weekly basis to impart education each and every uh, type of trader from value investor to purely day trader. It is one of the learning initiatives that Epic Research has taken to impart and initiate this process to impart most of the knowledge to clients and let them know about the market dynamics. We do these on weekly basis and regularly and as per demanded by most of our clients and traders across the global market. Uh, I'll start with about the content of this webinar about Epic Research. Uh, Epic Research Private Limited is a SEBI registered advisory firm. We have been awarded and rated by NSIC, SMER, Dun and Bradstreet, and Leadership Excellence Award we have won. We have presence in India, United States, Australia, Middle East. We have more than 10,000 satisfied customers, and we are having around 80% accurate trading calls in our investment recommendation. Our expert advice are in the domains of equity, cash, future options, commodities, both national stock exchange like multi commodities exchange and national commodities exchange. We also provide investment advice in COMEX market. We also provide recommendation in currency both at national platform and national stock exchange and international forex market. We provide premium research report to our clients on daily and weekly basis. Apart from that, we also provide corporate research solutions to our corporate clients we have on pan India and across the globe. To start with, I'll take you to the content about how I'm going to take this webinar and move on. I'll be discussing first trading strategies that is very must for each and every investor in the market to how to trade in the market, how to utilize your capital and churn out the most optimum return on your portfolio. Then I'll be taking you through Nifty analysis where I'll be applying technical analytics uh, on the charts. I'll be sharing some chart of Nifty that will be daily or weekly, and then I'll finally take you three stocks for the week that are right now looking fantastic on the chart and may give best returns in the coming week in the market. Then I'll take up the queries in particular if you have. So I'll request everyone to have a pen and paper and note down all your queries you have during the webinar, and you can ask them at the end of the webinar. I'll be sharing all the doubts you have and try to answer each and every one of your queries. Epic Research Trading Strategies. At Epic Research, we believe and guide all our traders to very strictly follow the trading strategies. Now, these trading strategies are very less in numbers. You just have to be simple in your trading approach. And second thing you need to have is discipline. These two, if combined, simplicity with discipline, you'll churn out the best return in the market one can have. Uh, First, only buy above or below the level suggested. When we recommend anything to buy above, that means that particular level is acting as a resistance, or that particular level is one of the points, if broken, we'll see a rush of volume, a participation of more of the traders on the retail as well as corporate clients, and then that particular level act as a resistance in the past will become the support. So we provide buy above because we have support and resistance. We have pivots that work in the market. Same as in below level, if we ask anything to sell below, we try to put that when you sell below, that particular point has acted as support in the past, and if broken, will be seeing a downfall in the prices. So buy above or below is very crucial to understand when you're trading in the market. Always keep proper stop loss in all your trades. Whenever you are entering into a trade, you can put a stop loss in your trade. That is one of the key things. Stop loss is a very negative word when said to clients, but it has a most critical importance in daily trading strategies. And this particular word can actually make profit to you on daily basis. How a stop loss can make a profit for you, I'll try to explain on the third point and fourth point. Uh, Keep booking profits and trail the stop loss as advised. Now, whenever we recommend everything, we provide you three targets or two targets or a single target in many of the service. Where there is a single target, there is no question of trailing the stop loss. But when you have multiple targets in any recommendation, you need to book profits. Now that profits can be 70% of the first target. Book 60 to 70% profit on the first target and trail the stop loss as advised. When you trail the stop loss after booking profit, you are actually putting your stop loss at a cost price. Now this particular stop loss I've put at a cost price, so we'll make sure that whatever you have earned on the first target is the return you get on the trade, and the remaining quantity or the remaining lots if you have will be acting as a stop loss, and that will actually safeguard from any of your loss. So try to trail the stop loss on every level or every time you book profit. Do not trade in trials and only observe the calls. We recommend our clients and all the traders, when you take a trial or when you uh, take free advice, do not take trades in them, because every investor have a different set of rhythm, every different set of tune. We can have a conservative investor, we can have an aggressive investor, we can have a moderate investor. All these kind of traders in the market have a different attributes in them. So whenever you are taking a trial, do not trade in them, observe them. Are they being set to your rhythm, your type of trading? Because in general, if you are an aggressive trader, uh, you will have a lot of seasoned experience in the market. So you need to identify yourself with the calls. If you're liking the targets, if you're liking the calls, if you're liking the targets given with the return, so you need to adjust. If you are an HNI, you would seek a higher return. If you are a retail trader, you would not seek high return, but you will seek a quick profit in the market. So you must know uh, when to book profit and when to exit. So do not trade in trials, only observe the calls. Fifth is never overtrade. As it itself say, never overtrade. Overtrade means do not put all your capital in one single call or one single advice. Try to distribute your capital equally. Use 30 to 40% of overall capital in a single trade, so that you still have 40 to 60% left, 60 to 70% left for rest of the recommendation. So in the initial recommendation, when you make profit, you actually have still a lot of capital with you for to invest in other recommendations. So never overtrade. Trade with equal capital in all the recommendation. Never trade on rumors. Any rumors in the market should not be traded upon. This is one of the biasness and one of the herd mentality or anchoring or many rumors we have. So never trade on rumors. Always consult our advisors in case of any confusion or query. You need to understand that you have an advisor just a telephonic call away. So always consult with the advisor if in case you have any confusion or any query you have, because in any case of confusion, you might not be able to take a decision as fast as your advisor can advise you what to do. So in case of any confusion or query, consult our advisors. We suggest to trade on all our calls and maintain uniformity in trading patterns. See, these are two crucial words. Trade on all our calls and maintaining uniformity. When you trade on all our calls, so this will help you recognizing that how much capital you need to invest in a single call. So that is why I have clarified that you need to invest 30-40% of capital and take a limit and take leverage on that your broker allow, and then maintain uniformity. If you are trading in futures, you uh, maintain the same number of lot you have, and if you are trading in cash, you uh, try to invest same amount of capital in each and every single call. Do not change the trading capital lots in the middle of the month, as this will disturb your risk reward ratio. When you are trading in the market, you must remember rule number 8, that you need to maintain uniformity, because this, if you change in the middle of the month, which I've clearly mentioned, it will disturb your risk reward ratio. When you change your trading pattern or your trading style or your capital in the middle of the month, it will disturb your risk reward ratio, so it won't keep uniformity in your trading patterns. So try to, if you want to change, you should consult our advisors first, then change. That you can invest more or you are trying to reduce the capital, so one can advise you clearly that okay, this can be done, but let a month or let a week be completed so that you have a uniformity at the end of the month. Those trading in single lot, of course, need to book profit in first target itself. You don't have to be part of a greed, or you don't have to be part of a herd mentality. You book profit, take a quick profit and get out on the first target itself. As you are a single lot trader, so you would have a limited requirement. You need to have a discipline in your to maintaining your capital. So try to book profit in first target itself. Now, coming on to Nifty chart, as this particular webinar is on hot stocks of the week, so I'll let you have a brief view about Nifty. Now, this may be a chart of Nifty which we are seeing. This is a year-old chart, and currently the market is coming at 8521. I've taken the spot market chart. Now, if you see over here, Nifty was in a continuous uptrend for the past 1 year till January, where we have seen a particular reversal happening. If you see, there were buying signals on the 100 days moving average, which was acting as a support. Now, this was a 50 days moving average. Now, these are one of the supports which we identified in the market and recommended our clients to have a position in on positional basis. Now, since January of end, we have seen a market changing the trend. Here it topped out and then again it came to this level, but it actually wasn't able to breach, and this was one of the spike that we witnessed on the market, and we have seen continuous downtrend since then. Now the actually trend which has changed is over the June period, where we were seeing actually lower bottom, lower top, lower bottom, lower top formation. And here after this low bottom, we actually didn't see a lower top, but we see a breach of this particular level, where everyone was saying 8450 was crucial level. Why? Because this is one of the levels where a lower top should be formed here around somewhere at 8200, but market breached 8400 and have given an upside breakout and reached to 8650 levels. Though in this particular week we have seen correction in the market, a lot of volatility was there, and this was the trading range of 8650 to 8500. So there was a lot of volatility, but the trend overall, which was in downtrend, has been changed. And this downtrend we have had from February to June of lower top and lower bottom, lower top and lower bottom, has actually now been into higher top, higher bottom, higher top, higher bottom, and this is one of the higher tops. So we are expecting one of the lower bottoms at 8400 levels and 8350 levels, because since the trend has changed, so we'll try to remain in the positive trend we are witnessing since June, and we'll try to have a buy on dips, but do not have a buy on dips on a daily basis. Try to have our expert advisor recommend you the strategies and recommendation. But the overall Nifty chart suggests here that it is coming down to make a lower bottom right here around 38.2% retracement, that is at 8390. and we also have this particular trend line support. And if you are a seasoned professional, you must know that this can be identified as one of the inverted head and shoulders, and of which we have seen a breakout. So let's hope and wait for 8400 levels, where we might see a buying initiated for higher targets of 8800, 8900. Now, our first recommendation for the week is IDFC. Of course, you as a trader or an investor must have heard that this particular counter has been given the banking license last week, and we have seen a sudden jump in the prices to 157 levels. It is coming at 157 levels, and this particular counter has been in uptrend since quarter 3 of 2013, and it is making higher top higher formation, though there was a very uh, small range of prices, but it was in overall uptrend, so a good momentum was seen in this particular counter. We have had a positive crossover of 50 days and 100 days moving averages in this particular counter. I'll apply a simple technique of and tools of trend line in this particular chart. And if we see this particular trend line, which was starting from September 2013, almost 2 years back, is still validating the chart, and it has still not broken. And before the news came in, actually we saw already a reversal taking support of 100 days moving average, right, and coming at 50 days moving average in present. Will advise our clients in this particular counter to have a buy position. The risk reward ratio is quite favorable in this particular chart, given all the fundamental effects we have on this particular counter of recent bank license. Apart from that, technically this chart is giving a good risk reward ratio, and we may see this particular 146 148 level as a very good support, given the 100 days moving average and our trend line support, which is validated for past 2 years. And we recommend it for the target of 170, which is this particular level, and which has acted as resistance in the past. And if breach, we may see this particular counter going to 179.5, which is these are the levels. Buying can be initiated. The risk here is almost of 10 rupees, while the reward from here is almost of say 20 rupees. So a risk is of a rupee and the reward is of 2 rupees. So it is one of the favorable situations you can have in the market. Though Nifty is, as I said, may have a 30-40 points, but this particular formation in the chart suggests that 148 is the price where it has bottomed out. So keep a strict stop loss at 148, 145, 9 levels, and initiate your buying position for the target of 179, which is our final target. Well, I would suggest you keep booking partial profit of our first target of 170. If you have any doubts, you can note it down, and if you have any queries and queries related to this particular counter, you can note it down. I'll be taking them at the end of this webinar. Our second analysis is of Voltas. Capital goods space has particularly performed very well in the past 1 or 2 years, irrespective of the uh, National Stock Exchange benchmark index Nifty. Capital goods particularly have been in uptrend, have been given better returns as compared to other indices and overall correlation with the Nifty. But if we have seen in the past a few months where Nifty has been in continuous downtrend. This is the Voltas weekly chart, and you can see this particular counter being in a continuous uptrend. There may be particular trade setups which have initiated the positive crossover of 50 days and 100 days moving average. When the market actually started in downtrend, this particular counter had a moving average buy signal generated, and it has been continuously in a higher top higher bottom formation, and this is one of the places where I would suggest to initiate a buy position in this counter. It is coming at 317.3. This counter have a very favorable risk reward ratio right now, because I believe it has bottomed out at somewhat 300 levels over here, and we have a trendline support of a year back, and we can see this channel of higher top higher bottom which is forming, and there is an accumulation phase which you can see, and we have seen reversals from this trend line. So keeping it very simple, you can buy at current levels of 317.35 levels of its closing. You can keep this counter for a higher target of 340, which is very much visible on the chart. Positional traders or long-term investors who are seeking to make a higher profit of this particular bull run, capital goods space is one of the places where we have seen a continuous uptrend. So Voltas is one of the stock where you can try to make a bet. The risk is here is of just 17 to 18 rupees, which is almost 4 to 5%, while the return is here of almost 10 to 20%. So if this particular counter here sustains and returns from 317 to higher targets of 340, we may see it making a higher top at 355, not just 355, 380, but it should be having a time horizon of more than a month. But for weekly traders, 317 is a very good level to initiate a buy position, and you will get a 340 target, 340 and 355 targets in coming time. Now coming on to our final counter, Sun TV, and Sun TV. This is one of the counters which has faced much more news effect on its chart. If you're as a trader, you are aware of the market. Many news came in about the uh, channel, about its operations, about its validity or licenses. So, which this particular events has been observed in the chart. But if you see at the overall chart, and this is the weekly chart, there hasn't been much say change or shift in the trading range for past 3 years, more than 3 years. If you see, it has a very tight trading range of 440 levels to 200 and 320 and 290 levels. Now it may be a downward sloping trend line which is providing support since last 3 years, while the resistance can be easily identified on this upper line. If you can see, these points have acted as resistance in the past, while if you have a perfect advice and a recommendation, you can see this particular trend line from 2011, which gave support to prices in 2010, is coming at this particular level of 270. The stock is currently at 280. The downside from here is not more than 10 to 12 rupees, but the upside potential, and looking at the overall trading pattern of these prices, we have a very high target of Sun TV, though it is right now. In the past we have seen was news driven, but keeping it very technical on the charts and having a bullish view on the Nifty, this is one of the counters where we may see a very good buying initiated with the best risk and return which can be offered by the chart. The RSI is here is bottoming out at the oversold territory. If you see, prices are making lower lows here and bottoming out. The RSI actually has reversed and is coming up at 38.646. The downside from here is limited to 250 to 55 levels. If you can see the trend line, the second trend line we have, the importance of trend line is very much because this particular trend line has been in support for past 2 years. This particular trend line has been giving support for past 4 years, while this resistance line is having there on charts for past more than 2 years, almost 2.5 years. So this is overall price range of the chart. Now we are having the price of 280 at the most favorable condition with just a small stop loss of 255. Sorry, one can initiate a buy position for a higher target of 280 levels is the buying price. Higher target will be of 320, that is almost 40 rupees. And if having a 1 to 2 month time horizon, one can buy this stock for a higher target of 370, though this has acted as resistance. So 370 is the resistance or the place where you can book your profit. The upside is almost 70 to 80 rupees, and if this particular range is broken, we may see 440 levels. So this is one of the fantastic risk reward ratio opportunity you have in this particular counter. The entertainment and the media stocks we have seen performing quite well, though this has been a chart which is in a trading price pattern. So one can buy this counter here, and we have given our target of 370 and 440 for all positional traders in 1 to 2 months. This is all by my side. If you have any queries, you can note it down right now. There are many tools Epic Research provide on regular basis. We have a very transparent process. We have regular update of all the calls and performance on our website. You can visit the same at www.epicresearch.co/research/track sheet. These track sheets have all the calls. Even we have a proven in the past, and we have a customer centric approach in each and every decision we take. So you can also find the timings of the call in our track sheet that we initiate on a regular basis. You can view the research report. These research report are from equity to commodities, forex to agri market. Each and every report is there. These reports are based on daily basis as well as weekly basis. These have all the market statistics and dynamics one need to have. We have also our Singapore website, which can be visited by our international clients at www.epicresearch.sg. I hope you will be having some of the queries which you can ask to me, which I have noted down during the webinar. I'll be open to take it. Uh, yes, I think we have queries here in abundance as the traders are uh, about IDFC at rupees 158 0.57 yesterday, and should I average out at lower levels, if any, or should just hold for the target? I can hold for 2 3 months. See, this is one of the prizes where IDFC is, of course, a buy. We have this recommendation in our webinar as well. IDFC is currently at a very favorable level. The fundamental factors of the company has just kicked in with a new license, as it was one of the uh, top priority contender of the banking license. That is one of the fundamental use. As far as I've just discussed the chart with you, 148 149 is one of the prices where one can put a stop loss. If you have a 2 to 3 month uh, if you have a 2 to 3 month time horizon, you can hold to this counter, and you may see higher targets in this particular counter till 170 180 levels. So there is no need to panic. You can hold on to this position, and you can book profits. If you have a 2 to 3 month, you can see higher targets of 180 to 210. Just make sure that you have a strict stop loss. If you want to average out, 152 is the place, or 151 is the place where you can average out. Keep a strict stop loss of 145 to 146 levels. You'll be profitable if you have a 2 to 3 month time horizon. Hello. Uh, I will take your question again if I wasn't able to hear. So one of the questions was Sun TV first. If the verdict is not in favor of Sun TV, it will come down. No, the price pattern for past 2 years has been into 80 to 440 range. So when you have a price pattern trading range of more than 2 years, yes, of course, the price at current price provides a fantastic buying opportunity with just a very minimal stop loss. So if you are a conservative trader, if you're an aggressive trader, you will understand with a risk of 20 rupees, 25 rupees, and a higher targets of more than 40 to 50 rupees. So at this moment, the price pattern suggests a buying opportunity, though yes, the verdict, if it is not in favor, well, the price discount everything. So when you're trading in the market, you must know that every price you have onto the terminal is being discounted by the traders around the world. Not just me, but everyone would understand right now that Sun TV is in a news based momentum, and it has seen a lot of news action coming in, but prices are discounted by each and every trader. But technically the price right now is providing a fantastic buying opportunity. The stop loss is of just 20-25 rupees, while the targets are very upside from here of more than 50 to 100 rupees. If there are any other queries, I would like to sort it out. Uh, any more queries if you have? If wasn't you were able to hear, uh, there was one question of Castrol. I would like to answer again that prices of Castrol have seen a downward momentum and profit booking. The momentum was good from 450 levels, but we have recommended Castrol twice in STBT and is still open in Friday's STBT recommendation. So I'll suggest not to hold on to Castrol. Try to exit on next trading sessions near 495, 496 levels, because we may see some kind of a correction in this particular stock. Though if 485, 480 levels is not broken, you can put a stop loss at that position and try to exit near 495, 500. So try to put a stop loss when you trade, and uh, try to exit positions, because we have given a STBT recommendation on Thursday and Friday as well, and has achieved our target. So you can consult us in case you have any position you want to know about. There was one more question of uh, Sun Pharma, and people ask about Sun Pharma. Just hold on. Yes, he asked about Sun Pharma and info about it. See, Sun Pharma has been into mergers and acquisitions, so there will be a lot of news. There will be a lot of spending, and during this process of uh, result as well. If you have seen the last quarterly result, it gave a gap down opening of more than 10%, where it came down to 930 levels from 1030. And currently as well, we have seen a 7 to 8% fall in the prices. So Sun Pharma is on overall downward momentum. Do not try to initiate any recommendation or initiate any buying or selling here. You can ask us, but yes, fundamentally the stock will try to be revived after, I guess, second quarter of this particular financial year, where we may see some kind of a margin improvement in the result, and because there has been a lot of expense during this process of merger and acquisition. So it's a good buy fundamentally, but technically right now is not the right time to initiate a buying position. What is charges of monthly subscription? You can visit epicresearch.co for that. Uh, if you have any query of services, we have many services from retail to HNI. So you can visit epicresearch.co and ask our advisor in that. So I'll be ending this webinar as we are actually out of time and it has stretched to 45 minutes. If you have any suggestions, any feedback, you can visit epicresearch.co or you can mail at info@epiclearning.in. I'll be happy to take it and answer all your queries through mail or through uh, uh, our emails, and you can also have a watch of me on uh, the business schedule which we mail to you and try to provide you on daily basis. We also provide our recommendations there and our views at large on national television. Thank you. This is Loveless Sharma from Epic Research. Thank you for being such a good attendees. We'll soon meet again next Saturday. Happy trading.